Alright, so in this video section we're going to be going over our 2019 results. We're going to first look at it from a nominal 1 unit size. In other words, we're going to look at how each algorithm did assuming 1 unit was traded on each one. Then we're going to look at some highlights. We're going to look at a bullish market sequence and then a bearish market sequence just to show you a few of the trade highlights from 2019. And then finally, we'll do the account tracker, which is going all the way back to 2017, where we'll review all 4 accounts that are trading the 4 different systems we offer. And we'll just kind of show you how they've done. All right, so before we jump into the results, I just want to highlight the disclaimers again. So keep in mind, risk of loss in trading futures can be substantial. There's no such thing as an easy trading system or easy money when it comes to trading. Of course, past results are not indicative of future results. Trade only with risk capital. And then finally, the balances that we show are from a nominal account trading 1 unit. It includes the fees that the broker charges, the commissions, but does not include the fees that my company charges. So keep that in mind as well. All right, so with that out of the way, let's jump into the results. So first off, I want to highlight I want to kind of give you an overview of what this slide is showing. So in essence, for 2019, so again, this is 2019 only, we have 4 company accounts that are tracked very closely, and each one is trading a different account size. So in a different algorithm. The first one is trading the wave trader. That's the one that's in the gray. The second one is the swing trader, and it trades on $20,000 increments. It's the green one. And then the third is the crusher, which is the blue one. And then the pro trader is the red one. And really what we tried to do with this slide is just show you bottom line how these algorithms did in 2019, assuming somebody traded 1 unit. So in other words, suppose somebody started at the beginning of the year with the swing trader trading $20,000. They could have expected to see these kind of returns each month as time went on throughout the year. And finally, the ending account size for 2019 is over here on the right. Now this is based off of live trades, so this is not a back-tested or sim account. This is taken from our actual live account. But just remember, it's from the Fox group, so it's from the gain capital that's being run by the Fox group. So if a customer started at the same time with the same number of units and didn't touch the algorithm, then they should have seen something very similar to what we saw, again, assuming that they didn't stop trading, assuming they didn't get out of any trades early, and assuming that they had the same broker, the Fox group. Now, if someone used IB or TradeStation, they still should see very similar results, but they might be a little bit more different. But even then, like I said, they should be very close to this. But I don't want to say they're going to be exactly the same because some of the other brokers get slightly different fills, especially with TradeStation, because that's something that is monitored by you and not by a broker. But so I guess the high level view though is this. If somebody started with us in 2019, really no matter what package they use, they would be up quite a bit. Now, there would have been a few roller coaster moments where it wouldn't have been fun, in particular February. Notice in February, the crusher was down about 10% for the month of February. But of course, in January, it was up somewhere around 13% probably. And then as time goes on, March was really good for the crusher. April was really good for the crusher. And then May, all the algorithms took a little bit of a drawdown, except for the wave trader, which is kind of interesting that the wave trader didn't in May. But then, of course, June, they were all profitable. July, they all had some losses. August, profitable. And what you'll notice, the reason why we put these stacked together is so that you can see the percent returns based on the system. So, if someone is interested in a smaller drawdown, then they might look at this bottom bars and look for which algorithm tends to have a smaller drawdown. Now here the crusher had a bigger drawdown in May and in February, but that might not be indicative of how the crusher will always act. So again, keep in mind this is just single months throughout the year. Okay, so now what we're going to look at, we've looked at the year each month by each system, but now what I want to do is just show you some details on a few of the really good months that we had, just so that you can kind of see what the pattern is. So I'm really doing this primarily for someone that's considering using the algorithms and not necessarily someone that's already a customer. If you're already a customer, then you already know how these trades tend to play out, how kind of the ebb and flow. But if you're totally new to this or considering it, then I want to just at least give you an idea of what the kind of trades that we've seen, kind of what they look like. All right, so what I decided to do is just pick one trade sequence from a bullish market condition. In this case, we're looking at basically all of December, and we're gonna be looking at one of the algorithms that's traded in the Crusher, the Pro Trader, and the Swing Trader. It's kind of the bread and butter algorithm that we have. It's called the Momentum ES algorithm. It used to be called the Bullfire. It's the same algorithm though. It's the one that buys the S&P and holds overnight, and sometimes it gets out the same day, but usually it'll hold for a night or two. Okay, so the thing I want to point out is that in this sequence, just to give you an idea, so this algorithm will buy 4 to 6 minutes before the market closes. And the profits that we saw just on this algorithm, so again, this is one of the algorithms that's traded in the Crusher and the Swing Trader and the Pro Trader. And this algorithm did $3,439 in this month of December. Okay, so, and you might be wondering, well, okay, dollar amount, but what is that on a percent basis? Think of it as, remember those 20K and 30K unit sizes that I mentioned on the other slide? Well, think of it as one unit. Let's say you started with a Swing Trader account with 20,000, and you were able to start, just before the 2nd of December. Then on this algorithm, you would have seen gains of approximately 3,439. So your account would have gone from 20K to 23,439. Now this doesn't take into account though the 10-year note, and so if there were gains on the 10-year note, it would add to that, and if there were losses, it would take away. But again, I just want to show you this one algorithm. The other thing I want to show you though, or point out, is that these numbers that I'm showing you here are from the simulated account from TradeStation, and so I have to put this disclaimer here. And the reason why, you might say, well, I thought it traded live. Why not just show the live trades? The reason why I can't show the live, or why it's difficult, is because I'd have to go through the statement and basically pull the data out of the statement and put into an Excel format, where this, in the sim account, it does it all for you. So just remember that the buy and the sells that you see on each line here, there would have been slippage on these of usually 1 tick to up to 2 ticks, but usually it's about 1 tick. I think our average, last time I looked a couple months ago, was about 0.3, so just kind of in between 1 tick and 2 ticks. And by the way, we model a full tick of slippage in all the simulated account analysis stuff that we do. All right, so again, the reason why I'm showing this is so that you can see all the different trades that would be placed in the month of December. So it had 13 trades. The average gain per trade on the sim account was 264. It had a winning percentage of 84%. We had 11 winning trades and only 2 losers. And if you look at this chart here, you'll kind of see, hopefully you can see it okay, but if you notice here, this very first trade was on the 2nd of December, and it got out on the 3rd of December with a stop loss. By the way, these times are referencing the candle. So it doesn't mean we got stopped out at 154 Mountain Standard. It just means we got stopped out sometime in that candle. But the key thing to look at is notice the losses and the gains. So that gives you an idea of how much the account goes up and down. So when we got stopped out of this trade, it was actually a pretty big stop out because it gapped below our stop. And I remember that day. It felt like December might start pretty bad because look at this. We took a loss of about 1,500 on that trade. But then look what happened the very next day. We got right back in, and we held for 1 day, 2 days, 3 days, 4 days, 5 days. So we held for about 5 days and caught this rally as it went higher and made about 1,900 on that trade. And then we got in and got out the same day. Notice this trade happened on the same day on the same candle. So we bought in and got out pretty quickly with a $200 gain. The same thing happened on the 11th. We bought again and then got out the next day. Then we bought here and got out the next day. And you'll see that as the market went higher, we had quite a few winning trades. But we did have a loser towards the end right here, followed by a pretty big winner. So what I want you to, I guess what I really want to point out is, even though when we get stopped out, it's not fun, like this, a $1,500 loss, a lot of times we will get right back in and have a pretty decent sized gain. So our winning trades tend to be usually bigger than our losing trades. And we have a pretty high win rate on this algorithm overall. Now, I also want to say though, look, I realize I'm cherry picking a positive sequence right here by showing you the December, okay? I realize that, but I really am showing it to you so that you can see on a pretty good month what it might look like. Now, we have had months though where there's no losses. So imagine if this looked like this only without losses. You know, I could easily show you a few months where that happened. So it really just depends, but this gives you a good flavor, or kind of a good idea of what can happen on a pretty good run. So hopefully that helps. And the next slide that we look at will show kind of a bearish condition so you can see what that looks like. So just remember though, this was traded in live accounts. So when we go back to this here, and you see in December, the swing, the crusher, and the pro were all up. A big reason why they were up is because of this algorithm right here. In particular, if you look at the swing trader was up by, if you kind of scroll over, it looks like probably about 5-6% maybe. And if we look here, remember this was up about 3,400 per 20K. So what that tells us is that the 10-year note algorithm took losses, which it did. And so when you add those together though, that's kind of the net kind of total results. Hopefully I didn't confuse you. Really my point is just show you kind of the pattern. So we'll get in, we'll get out, we'll get in, we'll get out. And you can see the dates on the bottom. In the month of December, we had 13 trades, 84% win rate, 15% losing, and we averaged about 264 per trade. And again, that's on the sim account. Again, I could easily show you the live, but it just would have required me to pull that data out of the statement. And it gets a little confusing when I do that. So I just would prefer to just show you from the sim and then have the appropriate disclaimer on the bottom here. Okay, so now I want to show you a bearish market condition with the same algorithm. So this is also the momentum ES algorithm, or the bullfire. And this again is the S&P 500, just like the previous chart. And maybe I should have pointed out that each day has two candles. I think it's, hopefully you can kind of see the dates on the bottom here, but down here it's the 23rd of July, the 25th, the 29th of July, the 31st of July, then you get into August, and then over here is September. So this is actually between the 22nd of July through the 5th of September. So this is more than a month. It's actually a month and a few weeks worth of trades. And the reason why I'm showing this is just to give you an idea of how this algorithm trades when the market goes lower. And this also could be sort of a down or a sideways moving market. You could look at it that way as well. If I would have cut out these last week or so here, then it would have been really just sort of a down market condition. But I figured I'd show you this just so that you can get an idea. Okay, so first notice that on the 22nd of July, we bought at the close at $29.91, and we got out at $30.19.5. And for those of you that aren't used to futures, each point on here is $50. So it's not like stocks where, you know, you might say, well, wait a second, that's 9 plus 19, you know, 30, 20, whatever, 28. Isn't that just a gain of 28? And how does that equate? Well, in the futures market, each point has a dollar amount value, and each point on the E-mini S&P is $50. So that's why the total gain is $1,425 trading one unit. So that was this trade right here where we bought, we held the next day, we held the day after that, and then we got out, or I'm sorry, we held the next day as well, the 25th, and then we got out on the 26th at the open right here, okay? So this was a really nice trade. That was a gain of about $1,425 per, if this is the swing trader we're looking at, then that'd be per 20K traded. So on this trade alone, we had gains of roughly 7% on that one trade. So really good trade. The next trade, we had a loss of 1,187, so we gave some of that back. That's this loss right here. Now, notice what happens though. The market goes lower the next day as well, but notice how we had this little gain here of $200. Well, that'll happen. Sometimes this algorithm throws out a pretty quick target of about 200. And when it does that, it's really expecting the market to trade either sideways or possibly drift lower. In other words, something is sort of changing in the analysis that the algo is doing, which is why we get out. Because notice if we didn't get out of this on this day, we would have got stopped out again. So what happened is we took a small gain, and then we did get stopped out of 2 in a row. We got stopped out of one on the 31st and one on the one on the 31st of July, and that's this one right here. And then after that, notice how the algorithm didn't buy, and it was actually on the sideline for a few weeks. Now, depending on what package someone was trading, there might have been other trades. The day trades could have been triggering, the short day trade could have, and pretty much all of the algorithms, I believe, were in the 10-year note when this was going on as well. So that kind of thing will happen. This algorithm might be on the sideline, but the other algorithms might be triggering. So that's one of the things that we do really well at algorithmic trading, I think, is we're able to let the algorithms run. And let some of the other algorithms that do better in sideways or down moving markets sort of take over the kind of the trading responsibilities, you could say. All right, so what happens though is the market does sell off, and notice how we got stopped out up here. We didn't hold on to it and take a massive loss like I know some day traders possibly did. We got out, and then we stayed on the sideline for a few weeks, maybe 3 weeks. Then eventually the algorithm triggers again. And notice right here, it bought on the 30th of August, and it got out the 2nd of September. So just held for, I think it was probably just overnight. Yeah, just overnight, and then it got stopped out. You can see it kind of barely, that dotted line there. Well, that was another $850 loss. So yeah, if you add up all these, it didn't start well for us, at least this sequence. But notice what happened though. Eventually we had another winner, and then a really nice winner on the 3rd of September, and then another really good one on the 4th of September. And so if you add up all these trades in this sort of drifting lower / sideways market that we saw, we actually made about 1,298 per unit traded, averaged about 162 per trade. The total number of trades was 8. We had 5 winning trades and 3 losers. So we had a win rate of about 62% and then 38% losing. So when you add this to when you average this out with the other month that we were looking at, with the bullish, you can see that we hover, usually it's around 70 to 80% win rate on this algo. But hopefully this helps give you an idea of how this one trades when the market goes lower. So in other words, when the market rolls over, we'll usually either have some small winners like we did here, this one right here, or because sometimes this will happen and we'll have a $200 gain, $200 gain, then maybe one $850 loss. Sometimes it'll be more like this. We'll get stopped out, a small gain, and then a couple more, and then another stop out, and then it gets on the sideline. So it really just depends. But when you average it all out, the pattern is actually very, very positive for us, because it eventually does get on the sideline. Because you can imagine if the market would have crashed right in here, we would have been on the sideline. This algorithm, it's a momentum algo, so it won't get back in until it starts detecting some strength. And so when it does shut off, like it did here, when it gets stopped out and then it doesn't buy again the next day, that means it sort of stopped out and it thinks that either the market's going to go sideways or lower. And so the algorithm just shuts itself off and we're just safe on the sideline. The scary part is always when it rolls over, because you never know. I mean, if we're going to get one stop out or two, and that's never fun, but the pattern really is sort of a 2 steps forward and 1 step back kind of deal. That's usually the way it plays out. All right, so again, this, like the other slide, is from the sim account. But our live accounts were trading, and if we showed the live trades, they would look very similar to this. But I just want to emphasize though, this is technically from the sim account that I'm showing, and same with this chart. Otherwise, if we use the live, I wouldn't be able to show you this chart either. So so this will give you the hypothetical trades that were placed. But what happens is the way the trades get to the broker is whenever TradeStation does the buy, like you see here, it actually just sends out the orders to the gain capital account. So it is all automated even for the broker. The broker just has to monitor it and make sure that nothing is off. All right, so I think I've covered these 2 sequences pretty well. Hopefully this gives you an idea of how at least this momentum ES algorithm traded. And again, we had a great year, but let's go ahead and move on to the final slide for this for this performance video. All right, so the next slide that I'm going to be showing you is going to show the live trading accounts that we track, and the numbers are going to be pretty insane. And so I thought it would be wise for me to just throw up another risk disclaimer, just to try to temper the gains with kind of the risk as well. Because really, when I show you the next slide, I mean, the numbers are crazy how well those accounts have done. So I do think that it would be that it's good for me to just remind everyone that yeah, I'm going to be showing you some pretty amazing numbers, but there is risk involved with what we're doing. It's not easy, but for sure, if someone is looking for an automated futures trading system, then I think what we do is top notch. I mean, our numbers really speak for themselves. The numbers that I've showed you, by the way, are from audited accounts. When I mentioned the live trades, those are all from audited. So there's a lot of real positive things I think that we're able to report. Just remember though, I'm not a CTA, so I'm a third-party developer, and also this does include the commissions that the brokers charge, but not the one-time or the maintenance fee that we charge. So those are numbers that you'd also have to take out when you're looking at it. But when it comes to what we're doing, I think it's pretty amazing. And so let me go ahead and show you this next slide now. And I'll kind of highlight what's going on here. So, all right, so what this is showing is the 4 accounts that I've been talking about. So remember I mentioned the crusher, the swing trader, the pro trader, and the wave trader. That very first slide, I had showing the nominal. If someone had a 20K swing trader account, what it would have done in 2019, and then I did the same for the others. Well, those numbers that are, and again, they're audited by Michael Coglin. He's a CPA, and he does that for, I believe, for CTAs and for futures kind of traders like what we do. So they specialize in these alternate investment vehicles and auditing statements for actual CTAs. But again, I'm not a CTA, but what I want to highlight is that this shows really an account starting in February 2017 with 40,000. And so let's just look at the crusher, and then we'll look at the swing trader. So the crusher, this account started back in February of 2017 with 46,740. And between February 2017 and December 2019, it's traded between 4 and 5 units. So initially it was trading 4, and then I believe in around June of 2018, it bumped up to 5. Anyway, that account had a total gain of 103,000. So the account went from roughly 46K to all the way over here, which is about 150K. So yeah, this account has done just incredibly well, this crusher account. The swing trader has actually done even more. It started at 40K back here around the same period in February, and as of the end of December 2019, it also has about 150K in it. So I know it looks kind of weird because these lines connect. That's really just kind of a random thing that they happen to do that. But what you'll notice is the swing trader had a pretty steady climb in 2017. Then 2018, it had a little more ups and downs, and then a steady climb in 2019. The crusher had a little bit more of the ups and downs, and that was really because of the iron condor. So in 2017, as well as the beginning of 2018, it traded the iron condor as well as the covered calls, and those kind of took away from some of the gains that it had. But really what the key thing is, I just want to show you that the swing and the crusher have been trading live now for about 3 years, and so these accounts have only traded these algorithms. So this account that we audit, it's a crusher account, and it's only traded these contracts. There's been nothing added to it and nothing taken away. Now, same with the swing trader. The swing trader's only traded 4 the entire time. Now, a couple things I want to point out there. Notice that it started with 40,000 trading 4. And some of you might notice, well, wait a second, I thought it was 1 unit per 20K, so shouldn't that only be 2? The answer is yes, that's why we do a nominal. So this account was able to trade a little more aggressively. So there are times when the brokers will allow for certain accounts to trade a little more aggressively than the other ones. This one happened to be an aggressive allocation of 1 unit per 10K. And then the same on the crusher. So, but the key thing is it stayed at 4 the entire time. So when the account hit 50K, it did not go to 5. And when it hit 60K, it didn't go to 6. It traded 4 the entire time. So even now, even though it has, the 150K in it, it's still trading 4 units. So so it's not compounded. And so we're showing this just to give everyone an idea of what a few accounts have done, and just for people that are considering the algorithms. Okay, so let's look at the Pro Trader and the Wave Trader though. That's this account, or that's these equity curves here. Notice they began in April of 2019, and that's because the Geronimo algorithm was a new algo, and that's an algorithm that kind of created the Wave Trader and the Pro Trader. The Pro Trader though is really just the Crusher plus the Geronimo. So 5 of the algorithms that are in the Pro Trader, and the Pro Trader trades 6 total, but 5 of them have actually traded live since February 2017. One of them though is new, and that one was launched around April 2019. So that's why we start in April of 2019. And this account is only trading 1 unit, but it went from 22K, and it's the green one, from about 22K up to, this should be about 40K, I think. Had a total gain of about 18K. So it's done really well, this Pro Trader. Wave Trader started at 12K and 339, and it had a total gain of 5,658. So it went from 12K to, yeah, probably 17K roughly is where that's at. All right, so so hopefully this is helpful. Again, I just wanted to show you this so that you could have an idea of what accounts that have been trading with us for more than a year, kind of what they've done. And this is not nominal, meaning it's just the raw account balance. But again, it doesn't take into account our one-time fee and the maintenance fee, but it does show the kind of just what a typical customer that would have started at the same time with about the same amount, and assuming they didn't change the account size or cancel any of the algorithms or turn off any of the algos, if they would have just let it run, then they would see gains very similar to this. But of course, we can't guarantee that in the future this will hold. There's always risk of loss, and so I think I've kind of talked about that probably enough though. So I think now we'll go ahead and go on to the next slide, and we'll talk about sort of the contact us information so you know how to reach out to us. Okay, well, I hope it was helpful for you to see some of the performance numbers that we had in 2019, the sequences, the bullish, the bearish, and just what a couple accounts that have been trading with us since 2017, how they've done. If you want to reach out to us, just email us at sales@AlgorithmicTrading.net. You can also go to our website, AlgorithmicTrading.net, just fill out one of the contact forms, and you can request a demo. You can also give us a call. Just call us. We usually have one of the guys on standby monitoring the calls. So there's a couple sales guys that work for me, Rich and Brent, and they're happy to help walk you through any of the data that I've shown you. And if you want a demo, just let us know. I'd be happy to walk you through the charts, show you some of the numbers, and just answer any questions you have. But I hope this video was helpful. It's been a great year in 2019 as these numbers show. You can find quite a bit more data on 2019. If you just go to the website, you'll see the tear sheets that show kind of the breakdown and the comparison to how we've done versus the S&P and what our drawdown has been, some of those numbers. But overall, I mean, it's been a great 2019, and we're really looking forward to 2020. And I hope this was helpful, and please reach out to us if you have any questions. All right, have a great day. Bye.